Okay, welcome everybody, welcome everybody, welcome everybody, welcome. Okay, alright, welcome back to this channel. Welcome back to me. Welcome back to experiencing me. Okay, so yesterday we did analysis, but before I did my review, we had a class, and we talked about this thing, run on the higher time frame second and the lower time frame. Excuse me. We talked also about this. After a group of structure, we expect a pullback on the same time frame. We talked about higher time frame, medium time frame, lower time frame, and then swing fractal internal. Today we will add not more, but we will add something. We will add something called premium and discounts pricing. So premium and discount pricing is something we will also talk about. Discounts, yeah. Okay. So yesterday we had this fractal structure. We were trading within this fractal range, right? So what is the essence, and before everything, I think it would be important to note this thing down. So I'm going to start from market structure. Supply and demand, but whatever I'll do with demand and supply, nobody can do me anything. Demand and supply. Okay, then we have liquidity as well. Cool. So I think this is what I will use. This is the framework, right? So everything that I'll talk about comes from, everything now I'll talk about. So this forms the basic of my language. If I use supply and demand, whatever, liquidity, supply zone, market structure, whatever, everything is, let me anchor this before. Everything is stemming from this market structure, supply and demand, and liquidity. These three things, this is where it stems from. So it is in order of importance. You can see market structure is the king. Supply and demand, aggregately, and then liquidity in a way. I see liquidity to be like, it gives you some kind of, it makes you creative. When you think about liquidity, when you use liquidity, it makes you creative. So I will touch much more on that one too as well, because we have this strong line liquidity. and what happened? You broke it. You have and you are building another trend line liquidity as well. So we're expecting this one to weak. These things are all important, but they come later. They are like at the end of everything, right? At the end of everything, right? So looking at what I've said, or analyzing what I've said, let's use this framework to analyze this market. So what is market structure in the first place? What is market structure? Market structure, simple, is the high and a low in the market. A high and a low in the market is what we call market structure. So when we have this low and then this high, this is a market structure. It is an impressive market structure. When we have this low, right, and this high, this is also a market structure. We will connect to this line, right? Cool. Then we have this high and then this low. It is also a market structure. And so when we connect it, it is down. And when we connect this one, it is up. So this is where we get this uptrend and downtrend. So when we get a high and a low like this, we will connect this and we will get this. So when we get a high like this, right, and we get a low price closes at this level, we will connect this and we will get something like this. When price continues to make a lower low, it means we will bring a low, but this low is even lower than this one, so we have something like this, right? And then we connect this. Let's say from here price, we had this low, now this is the lowest low. Price didn't close this one this time around, price didn't close below this low, and we moved past this and we closed to the outside here. Will be this, right? So this is how the market is moving, right? A market structure is just a high or a low in the market, and a series of these highs, right? When we connect these things, when we connect these highs, it's called what we call a trend. So market structure is king. That's the most important thing. When we do market structure, the trend is the most important thing. You can't go against the trend, right? It is not right to do that. I don't think anyone can be comfortable trading against the trend all the time, right? You can't trade against. I don't think it is possible. Nothing is impossible doing that. The probability of you being profitable with only counter trend, it is possible, but the probability again is very low. So why don't you give yourself the best possible chance to succeed by following the trend? Okay, so if I say by following the trend, what do I mean by following the trend, and what is a trend? As I already established, so let's write this thing down. A trend is a series of highs and lows in the market. series of highs and lows in the market. So let's delete everything, right? For no, okay, let me delete this. I don't want to clear this, so or let me use the different charts, right? So in the same USD, we will go back and analyze what I've done. But let me see if I can, teach this thing so that when I'm saying something over there, it will make sense. So market structure, trend, and everything. So when I come into the market like this, the first thing that I'm looking for is the swing structure. What is the swing structure? What swing structure are you in? Okay. So a trend is just a series of this kind of highs and lows that is being connected. So you have something like this and you connect it. These swing structures, you have this, you have this. All of whatever is happening here are lines. They are connected lines. If you don't believe me, wait a minute. So what do you see now? They are just lines, right? Connected lines. Right. Series of highs and lows in the market. This is what the market is. Right? This is what the market is. But when we use candlesticks, it provides us, it gives us much clearer perspective, because now it is not just lines, and you can see that each candle that you see here, has characteristics. They are slightly different than the other. So you can see, although we have this red black candle, another black candle, and even this black candle, you can't see they are the same, although they are all black candles. So this thing, when we use the candlesticks, it gives us much information than the lines, right? So I've talked about a trend, I've talked about a structure. A structure is just a high and low in the market. A trend is a connected highs and lows in the market. I think I have the notes, but I won't use the notes. I have the notes. Should I use the notes? Yeah. Oh, yeah, let me use the notes. Another thing that I will talk about is a strong structure, and a weak structure. So when we talk about a strong structure, what is a strong structure? A strong structure is simply a structure that broke another structure. So when we look at these structures, how do you even know? This is the question. How do you know a structure has broken a structure or not? There is a question that I think, as I am talking, some of you should be thinking about these kind of questions. And whenever you are watching this video and some question you bow to the pause the video, think about the question, write it somewhere, or make sure you don't forget the question, keep it somewhere, write it down, pause the video, think about the question, think if you can find an answer in the video, or if you can find an answer on your own. Don't just sit there and watch the video, take notes. These kind of things are important. These kind of things are very important. So how do you know the high is broken or the low is broken? First, I will say it depends on the high you are looking at, and it depends on the kind of structure. So I think this will raise another question. If that's the case, how many structures do we have? How many types of structures do we have? We have 3 types of structures. So the 3 types of structures that we have is what we call a stone structure. We have internal structure, and then we have fractal structure. Okay. Cool. So if this is the case, then let's look at how each of them is broken, how each of them is sustained, this kind of things. Right. So I said a strong structure is a structure that breaks another structure. A weak structure is a structure that fails to break another structure. So before we go into this break thing to look at these 3 type structures, let's look at what a strong structure is and what a weak structure is, and what do we even do with that information. A strong structure is a structure that broke a structure. So we had this low here, right, and then we had a high. So that is clearly moving to the outside. We are clearly moving, making higher highs, higher lows, higher highs and higher lows. I think I will go into this higher highs and higher lows match, because I said, if you can remember, I said base highs and lows create an uptrend, and base highs and lows create a downtrend. So you go much into what a downtrend is, and you go much into what an uptrend is. We have this impulsive move to the upside here, right? I will also explain what an impulsive move is, an impulsive and corrective structure. So I think I will explain. Corrective phase or corrective move. So I will explain these 2 as well, and then I will explain uptrend and the downtrend. And the downtrend. Okay, so anchor. Okay, and now this is the last low, right? The last low that we had, that is in breaking. We haven't traded below here as price was trading above the structure. So you place the structure here. Okay, so let's say this is the last This is the last low. This is the last low, and we had the last high. Where price started to trade to the downside. So we also use this as well. Now we are looking at a trend here, right? Why is this a trend? Why is this a trend? This is a trend because remember the definition of a trend: a series of highs and lows in the market. So when price is making a series of higher highs and higher lows, it means we are trading in a bullish market structure. When price is making a series of lower low and lower highs, it means we are trading in a bearish market structure. So a series of this bullish, which is this uptrend, this higher highs and higher lows, and these lower lows and lower highs, which is a bearish market structure, makes a trend. So whatever we are seeing here, this is a trend. You can see we have this high, low, high, low, high, low, high, low, high. Enterprise every day. We have this is the last low, right? Enterprise every day. Price every breaking this low. So now we've broken this low. We've created a down. You can see what I was talking about. Now we are creating a down line instead of this high. So now we have created a down line which is lower than this one. So if we see this, a trend has shifted. Ideally, if you see something like this, this trend has shifted, and now we have this high here and this low here. So we expect price. No, we expect anything. Just keep in mind that if we break below this is the last low. A trend has shifted. We are having a trend change. So from what I was talking about, here will be our last low, right? That caused the move to the upside. We broke this, we pushed to the upside, and we started to move to the downside. We push to the outside and back the downside, right? So now let's expand this. When we are looking at something like this, you can see here was the last high, right? And then we had this last low. And what happened? Price moved to the upside. We didn't close below the last low. Sorry, we didn't close below the last high. What happened? We pushed to the downside to close below the last low. So now we are having a lower low. Although the idea behind the thing is, although we are having a low here, this low is still lower than this one. Although all these two are lows, this low is lower than this low that we are having here. It's lower than this blue low here. So it means we are having a lower low, and when we have a series of lower lows and lower highs, here is a lower. Okay, here is a lower high. So you can see, although this is a high, it is not higher than this. So it is lower high for this lower low, and this is a lower low, and this is a lower high for whatever we are seeing. So a series of last high, and then last low. This means we are trading in a bearish market structure. right? So here is the range, right? I think it will make sense when I go much through what I'm talking about. Here, you have to pay close attention because this is where I'm setting the foundation. This is where I'm setting the foundation for you. Okay, so here is this, you can see this, yes, one move. So here is the high and here is the low. What happened? Price came to the downside and we broke this low. So when we break this low, we've created a lower low. When I was talking about a strong structure and a weak structure, so strong and weak structure. When I was talking about a strong and a weak structure, the definition was, and it still is, a strong structure is a structure that breaks above a structure. Simple. A strong structure is a structure that breaks a structure. If a structure fails to break any structure, it is a weak structure. So let's, with the definition, I hope you are taking note. With the definition, let's look at how this thing looks like. This is the high and this is the low. You created a lower low, and now here will be our lower high. So we have this. We are trading within this range here. When we are having this kind of structure, it means you are trading the bearish market structure, a series of lower low and lower high. We are trading within a downtrend. A downtrend is also called a bearish market structure, and an uptrend is called a bullish market structure. A downtrend is a series of lower lows and lower high. A higher high is a series or a trend, and a bullish trend or an uptrend is a series of higher highs and higher lows. So looking at this, here is a strong structure because it broke this low, this lower low, this low to create a lower low. We broke this low to create an even lower low. So this is the strong structure. Why? Because it led to a break of this structure and we created this low to make this connection to form this bearish market structure. If this high has broken this, then it means it took a lot of money, because to even move price a pip on $1, bro, trust me, it takes billions of dollars to do that. And for price to move from top here, right, for price to move straight to the downside to break this structure, because you can see this was an upside move that led to a break, whatever. I won't get much more into this. I don't want to digress. But the idea behind the thing is, when we have a strong structure, when we have a structure that breaks another structure, it means it takes a lot more money to do that, which means that structure is protected, which means when price is approaching that zone, we expect those who got in to push price to the lows to break the structure to step in again to do that. I hope I'm making sense. So if that's the case, when price breaks a strong structure, it means trend has shifted. We have changed trend. The reason why in here, a person trading from the strong structure, nearly targeting the weak structure. That's the underlying, the fundamental. That's what I've said. It takes a lot of money to do that. So when sudden happen now, it means she can't at that point now the movie price no, it's heavy, it's huge. If that's the case, then when price is coming to that area, we expect price to continue the move. That's the general analogy. So when that happens, when price comes into the area, you are not going to necessarily jump into move straight.
No, you are not going to do that. There are certain things I'll be looking for next time, man. That one will come later. But you have to understand what you are doing. I mean, why are you even trading from this structure? Why are you doing this? You have to really understand, have a fundamental understanding, the basic of everything. Because if the foundation is weak, forget, you are building crap. So let's continue. We've broken this structure. The moment you break this, it means the trend has changed. Now, instead of making a lower low, price made a high. Price made a high, which was higher than the last lower high. If when we change a trend from bearish to bullish, this is what happens. It means price has created a high which is even higher than the last lower high, the last strong structure that caused the move. It means trend has shifted. It means this is no more a strong structure, but rather this is a strong structure. Why? Because it has broken this strong structure. When a strong structure breaks another strong structure, trend changes. When a strong structure breaks another strong structure, trend changes. Okay, so now when we look at this, we can see that this is a series of highs and lows, right? Cool. What are these highs and lows? You can see we had this correct move. Correct move. Cool. This is what we've seen. So now this is from the highs, right? Let's draw it from the lows. So this here, you can see this one will be the last low. Let's use the lows. Let's use a different color. Let's see red, right? Okay, now let's look at this. When we are looking at remember the definition of a structure. A structure is just a high or low in the market. When we connect this is when we get a trend. So now let's forget about trend, look at the structure. When we are looking at the structure, we can see that only the highs after this trend shifted, after this strong structure got broken, only the highs got broken, right? Only the highs was broken. Only the highs was getting broken. Only the high was getting broken. But the lows never seen. You can see that this lows was still holding. This low held. This low held. Now, the moment this low, which is this last week, let me use another red line for this. So this is the last low, right? This is the last low. The moment this last low got broken, trend has shifted. It is the same as this low got broken, right? I hope I'm making sense. So if the highs in a bullish market structure, the highs are weak. In a bullish market structure, the highs are weak. In a bearish market structure, the lows are weak. So the lows are weak in a bearish market structure, and the highs are weak in a bullish market structure. Anchor, cool. So this is the thing. The reason why we keep even getting this series of these highs to even form a bullish structure is because these highs are weak. So it do have price to get not true. Price to get not true because it is bullish. So we will keep going up. We will keep making highs and highs and highs. We keep making even higher high. This is where this term comes from, because you have in a bullish market structure. Bullish market structure is defined by a series of higher highs and higher lows. I think this is pretty basic. Right, a bullish market structure is identified by a series of higher highs and higher lows. So this is where this term higher high comes from. It means price has made a high, but we even make a higher high, a high that is even higher than the last high, and now we've got another higher high again. Okay, what is this? Where does this lower low come from? This higher low. So we have this low. When price made this high, we made a low, and we continue to make another higher high. So it means even price made a low here, right? We made a low here. Even though price made a low, it wasn't lower than this one. It was still higher. This lower is still higher than this low. So it is a higher low. Although it is low, it is still up. It is a higher low. So these are the basic things that I also keep in mind. So since the highs are weak in the bullish market structure, we look forward to trade from the lows and target the weak structures. We look forward to trade from the strong structure, right? The strong structures, which call these breaks of structures, and target the next weak structure. When we have this, we will target the next weak structure. So before I will allow you a minute for whatever I've said to sink in, because okay, you will be adding it layer by layer. Maybe you will be adding it layer by layer, but it will still keep on getting advanced. So take a minute for yourself and relax to continue to absorb whatever we are about to continue. Yeah. Okay, so I think this question has to come to only 3 people that are really paying attention. If say we are expecting or we are looking forward to trade from weak structures are looking forward to trade from weak structures, and target you are looking forward to trade from strong structures because of whatever I've said, because there's much money behind it, because it has broken a strong structure, it has broken a structure, and we continue these kind of things. We are looking forward to trade from this low, which is a strong structure, and target a weak structure. Why? Because a weak structure didn't break any structure, a strong structure broke a structure, a strong structure did a job. How would we know? Because let's say price is here, let's say price coming back. How would we know this is the end of the structure and we will break this, right? And price will continue to move to the upside. How would you know all of these things? Because you don't know. Although we've broken this, and as I have already established that we are expecting price to continue, especially in the bullish market structure. So now you can just combine this idea of the bullish market structure, making it which is a series of highs and lows, which is a series of higher highs and higher lows, and connect this strong structure and weak structure. You can see that you are getting a clearer idea of how the market, how even the market moves. Because if the higher high is telling us that we are in a bullish trend, and we will continue until the low is broken, then if I get this high here, I'm expecting this break to the downside, continuation, break, continuation until this one will break, right? If the strong structure breaks, then it means we are selling. For some people, they wait for price. Let's see, we've broken this, when price is coming back to the downside here, they won't classify here to be a weak structure yet, and they won't classify, let's see, they will classify somewhere here to be the structure, but they won't classify this to be a weak structure yet until this low is broken, right? This is where they will classify here to be a weak, so that they will trade whatever they will use with it. But from what we do, and from the idea, looking just at my definition of the things, I think before I will continue, I would like to point this thing out. If you understand whatever I'm saying, you have to really understand the language that I'm using, the vocabularies, the words that I'm using. If you really understand this kind of things, if you understand the word now I'm using now, this thing is very normal to you. You just have to understand the vocab, the definition, get the meaning. If you get the meaning, that be your, maybe not be your, but you are like, that will be like 50% of the work done. If by clearly understanding the meaning and the definition of what I'm saying, because this chart that I'm using to explain is nothing. It's nothing because it is random and unique. This thing is just happening in a moment in time. It is the same as whatever is happening here. It is random and unique. It is the same as, so the chart in Lancashire, it doesn't really, it makes sense. Like the chart in Lancashire, maybe like a matter, the matter. What it actually matters is to understand the concept, to really understand the concept. That is the most important thing. Seriously. If you doubt these things, forget the market you need. If you be candles, if you be candles, you learn and make money. It's not even about learning. You just understand the market, because the fundamental, that's how the market moves. That's the basic, the rudimentary. So we have this week. Now I've explained weak structure, I've explained a trend, I've explained this bullish and bearish market structure, I've explained okay, cool. So the lows are weak. That's why we trade from a strong structure and we target. So we trade from a strong structure and target weak structure. So this, if you ask me now, C1 for Nima. If you ask me, I will say this is the backbone of everything. Trading from a weak structure and targeting a strong structure. Because if you can remember, in the beginning, I said, the probability of one becoming profitable by just trading from the weak structures, trading counter trending, trading against the trend is, I don't know, it's low. So as I'm continuing, you understand. So you have a strong structure and a weak structure and everything. Now, how do we know a structure is broken? Back to the question. Let's say this is the last low. And this is the last high. With the idea, right? With the idea, with the definition of what I said about what a high is, what the structure is, because whatever I'm talking about, I'm talking about market structure at the moment. I'm talking about market structure. Excuse me for a minute. So whatever I'm talking about, from time I started to I see, you can see I'm just talking about only market structure. So you just have to think about the highs and lows. These highs and lows need to be connecting with the trend, right? When this high back will break high back, you can't say uptrend. Say high back, say high, and then if you really break the low, as it could break the higher, it means that low is a strong structure. So whatever I'm talking about, the high and then breaking a weak structure. Whatever I'm talking about, I'm talking about market structure. Just think about market structure, nothing supply and demand, and then forget Sanko form. Think about only market structure. Think about only the high or low in the market. That's the definition you have to keep it in mind. So if say you are trading within a range, this is the range. This is what we call a range. This high and low in the market, this is what we call a range. So if we are trading within this range, this is the range, right? Now this range, a player TV. This one is a fresh range. we haven't started to pull back yet. This is how the range will look like until we pull back, and then we break this range and it will form. So price will pull back something like this, and then we'll break this range. Let's say you have something like this. This is the same range. This will be the range we are trading within, something like this, like what we were trading within here, this range. So if this one also breaks this, we will have something like this. This one will be a range that we will be trading within. This one will be a range that we will be trading within. Here will be our high. If we break this, we will have this. You see, although these are just highs and these are just lows and highs, right? Lows and highs, they are connected. So a connection, a series of these kind of structures create a trend. I have to repeat myself for you to understand. It is very important to get the fundamentals right, because forget the market is there. Like what every day the market will move and will create these structures. If you understand how to read them, that's all. So this is what we call the range, trading range. This is a tradable range, right? This is a trading range. Cool. Now I'm going to continue with the swing internal structure, the much awaited topic. When we have something like this, the move that created the range is the swing structure. Is the main structure. The move that created the range is the main structure. The move that we will be trading within the range, we will be doing that to facilitate the objective of the move that created the range. The move within the range, right? The move within the range are internal and the fractal structures. The move that created the range are the swing structures, or is the swing structure. So looking at this, the biggest structure that you can see, you have this swing move, this strong move to the outside. You have to, yes, I don't know, you have to understand this word I'm using. The biggest structure that you can see is this. When we look at this, why are we saying this the biggest structure? Just looking at this, let's see it broke above this. Here was the last high that created this last low. So let's say we are using this, here is where we have this move that broke this structure. So now I am building the framework of how we view the market, or how we review the market. So the swing structure, this is the swing structure, the structure that caused the range, the structure that we are trading within. Now the swing structure, always keep it in mind. The structure that is trading within the range, right? The structure that is trading within the range, these smaller structures are the internal structures, and the objective of the internal structures are to facilitate the objective of the swing structure. So now let's see from the way I'm using, because the strong structures are black, or the strong structures are red, and our weak structures are black. So here we will use let's see from this structure has seen this one would have been black. Why is this a black line and this one a red line? This one is a red line. Why? Because it led to a break of this structure. It led to a break of this structure. It led to a break of this structure. When we look at this high, what is it? Don't tell me I'm out of data. Okay, yeah. Hey. Okay, so why don't we take this zone? Why don't you take this? Emphasize this. I don't think you can say a changing structure, a changing trend, because this is also a high. This is also a high. So when price breaks this, why don't you say it's a change trend, but this? My aim is to really make you understand. So I'm trying to answer. I'm trying to anticipate any kind of question there will be, so that I'm really need to name the church the me. If you are really listening, you will ask this question: why say when you see me? Why say we man can say you broken this, but me you see where you know. Now cast your eye a little bit backwards. I mean that's our line. I mean far away to see. When we do ABC here, you can see that here was a strong structure because it led to a break of this low. It led to a break of this low. Right, price moved strong to the downside, and by the way, these strong moves are the impulsive moves. We will get much more into that later. I'm just pointing it out. But these strong moves are the impulsive moves. And what happened after the impulsive move? We had this little move, which is the pullback. These pullbacks are the corrective moves. Corrective moves are pullbacks. Pullbacks are retracement. Retracement are counter trend or whatever. Pullback. And then this one is an impulsive move. You can see another impulsive move. But I'm not about impulsive move at the moment. Looking at this, you can see that we broke this structure. We broke this structure impulsively. We broke this structure impulsively. Right? This was a strong structure. This was a strong structure because it led to a break of structure. When we look at this structure, they didn't break a structure. No, the answer is no. This thing we didn't break anything. Guys, this is the line. This if price breaks below this line, we've broken it. This one didn't break. But when we extend this one here, we can say this one has broken this because we've traded below the line, right? But this line, this structure, this high, look at this. We just move to the downside, push a little bit up, we move to the downside, and we failed to close below this line. What happened? We came here, we moved a little bit down, and we continue to break above the major move, the major high that caused the strongest move. So now, because this one has broken this structure, right? Because this low has broken this high, and now we've created an even higher high. It means we are in the bullish market structure. I think I will save this and we'll go much more deep into this tomorrow. Right, we'll go much more deep into this bullish market structure, bearish market structure, while we are looking for everything. We'll go much more into that. So this is the bullish market structure. This is how it looks like on the chart. When you get a series of these things, is when you get a trend. Now this is how a bullish market structure looks like on the chart, because here will be the weak structure, here will be the structure that was broken by this strong structure, and it was a strong structure because it left a break of structure. It also broke a structure. So now a strong structure has broken a strong structure, and it was a low, but that low has broken the high and has created an even higher high, which means you are in a bullish market structure. The same thing is how you will explain this one. If we are looking for it to explain this, you can see that this was the high, right? This was the low. In a bullish market structure, we are expecting this to go so that we will create an even higher high, right? A connection, then we will continue the move. But this, we created a high, instead of price to create the low and for price to come and break this weak structure, price didn't. Price moved impulsively to the downside and we started to move correctively to the upside, and we continue the move impulsively, and then we broke the line. We broke the strong structure that we were expecting not to break. So how do we see this? You can see say a strong structure has broken another strong structure, and this was a high and has broken this low, and it is creating an even, and it is creating even a lower low, right? It has broken this low and it is creating an even a lower low. So now this is a bearish market structure. When we connect this, you can see we have a bullish market structure. When we connect this, you have a bearish market structure. So now I say the red line signals a strong structure. Here will be my weak structure, because now it has broken, right? It has broken. And then here will be my strong structure, because we broke this low, we led to the break of this structure. When we are looking at this low right here, we can't say this is a strong structure because it didn't lead to anything, it didn't break anything. If this low led to a break of structure, this bullish break of structure, this one would have been a strong structure, and this one too goes beyond this. But the general idea is, on this time frame, when this low fails to break this low, it is a weak structure. If it breaks the internal, it can break the internal whatever, it can break the fractal, but that's not the case until it breaks the swing high. Well, this is the swing high, this is the swing structure, right? This is the 4-hour structure. So if you break this, you are continuing the move, then you can classify here to be a low and a strong structure. Okay, now let's look at this. You can see we have a break. So now this is how a bearish market structure looks like. This is how a bullish market structure looks like. In a bearish market structure, the lows are weak, the highs are strong. So we'll be trading towards this low here. Now we've broken this. I'm expecting a pullback, right? A massive decent enough pullback, and I'm going into it. Then I will continue the move, and I will move it to here, right? Now, why would I move it to here and not here? So this one wouldn't change. Yeah, it wouldn't change. It wouldn't change. Rather, it will be here. Cool. So this is how the bearish market look like. We will pause here for today. Right. We will pause here for today with the lessons. I will add this. We'll add this. So we will pause here for today. We will continue tomorrow. I hope you have taken much notes, to absorb. You have to rewatch this over and over again because it is not scripted. So now I've talked about swing structure. I've talked about fractal structure. Now I've talked about swing structure. I've talked about what do you call it? Swing structure, bullish and bearish market structure, how they look like on the chart. I've talked about trend. I've talked about market structure. So maybe tomorrow we'll continue the market structure. We'll continue with premium and discount pricing. We'll continue with the internal structures and the fractal structures until we'll be done. But this will be all for today with the lessons. Let me go into my analysis and see what happened for today. What happened today is happening for today. So on the 4 hour, we have this fractal structure. Because it's broken this. Got this one low, push the downside, it has broken this. So we are continuing the move. Here's the last side. Our fractal structure, we are aggressive, so I think it will be here. So we moved impulsively to break this, which means we are trading within this range. I think I'll use here to be an IBOS, a chalk, chain of character, and then I'll use here as an internal breakup structure because price can still come into here. I can continue. So now this relate to a breakup structure here. I'm expecting this to hold. If we are going to move to the downside, also continue to tap into this zone. If we are not, then means we are about to start the pullback. If we are continuing the pullback, then this zone has already been mitigated. Sariko has also been mitigated. If we change this, we can be having an internal pullback. But no, this is the IBOS Ankasa. This is the IBOS, the top there. And this we won't change this, you can be expecting the move, can be expecting the pullback into premium. So you can be expecting the pullback into premium. This zone is not in premium. This zone is in premium. This one can go. This one is at the distal. We have this one too. This one. So if we are going to move up, we can continue the move. Kakra. But the thing is, at the zone here, see this one, we don't have any inducement here. We don't have anything here. We just have a strong push, which makes it quite risky. Because if we are going to buy, I'm expecting it to at least tap into this bullish order flow and this demand region. And this unmitigated extreme. At the moment, the bearish order flow is strong, right? So the last bearish order flow that we got, we had this one, and your liquidity. So now this is the last bearish order flow for. So now this is the last order flow. This is where price is basically. So I'm expecting this one not to break. If this one breaks, we are starting the internal pullback. So if this move is going to continue, if this move is going to continue, the breaking area eventually, because when we break this, now we can draw regions from here, demand regions from here, because we are expecting this low to still continue. But when we look at this, you can see say all of these zones have been mitigated. Thousands winning and to me and hoodie. You can see here reading. Into me and hoodie. So when price is coming here, we expect because we have already mitigated sideways. We expect to bring some kind of a reaction and have a pullback into some things around here. Or from this kind of areas, maybe to continue moving. But until say, so let me keep this because this is the last range. On the 15 minutes, you've broken this. On the 15 minutes, here will be the high. Here will be the high. Yeah, so on the 15 minutes, when we break this, when we break this 4-hour chalk now, it means this 15 minutes will switch bullish. And remember, the internal structure will switch to facilitate the objective of the swing structure. So if you switch bullish, that means you are switching bullish to facilitate the pullback into that 4-hour range narration. Cool. If price bust out last range area, okay, it's unmitigated. This is the last order flow in the 15 minutes. Price can come into this area. I think here the zone we have them first, and then all of these zones have been mitigated, and some of the other zones where still unmitigated. So we have these two zones here. We have these two zones here. So let's see how tomorrow will play out. I'm expecting price to be breaking into this zone. That means here change structure, which means we will expect that 4-hour pullback. We expect a 15 minutes pullback, which means if we are going to play the pullback, we can even play the pullback into Hasi, but SR9 it's a low probability. Can wait for price to come into any kind of zone and then you continue the move to the upside to play the larger pullback of the internal structure into at least EQ or into this kind of zone here. So that will be all for today. This will be all for today. I'm going to sleep 8:37. I'll go to work tomorrow, so man for prepare.